February 2026. A fair bit went on overnight. The Fed paused. Powell behaved himself in his press conference and didn't address the criminal investigation. We had three mega cap earnings: Tesla, Microsoft, and Meta. And I mean, it's almost getting a little bit boring, but silver and gold and platinum all were just absolutely flying again. So yeah, but this part here, Meta. So Meta's earnings came out. There was a lot of focus on the capex because their capex expectations were 110 billion, and they gave a range of 115 to 135 billion. So that's billion with a B, and that was like 20 billion higher than what they thought. Initially, it got whacked about 4 or 5%. Finn and I are watching it live, going, "Oh, the market hasn't taken that well." And then they've pulled apart the numbers a little bit and gone into the infrastructure data centers. They're pursuing super intelligence, and all the advertising revenue, and then basically it reversed that down 5 to be up 7 or 8% in the aftermarket. So Microsoft was pretty much heavy from the get-go, stronger than, I mean, look, they all report stronger than, I mean, if you disappoint, basically, you're doing something horribly wrong, because it's 80% of stocks always beat in the US. They reported stronger than expected second quarter, all above analysts, top and bottom line, but the shares fell 4%. It is Azure's 39% cloud growth only narrowly beat forecasts, and essentially investor sentiment's really cooling there about and concerns about the intensifying AI competition from Google and Anthropic, and pretty much anything that's tied to OpenAI at the moment. I wrote an article a couple of probably 6 months or more ago. Like, I think there's a very large chance that Sam Altman's going to go from being poster boy of the AI to the poster boy of the AI bubble. And look, and Google's very much, realised that it was a marathon, not a sprint, and they just keep coming and coming and coming at these guys. Elon out of nowhere as well with XAI and things like that. I don't think I wouldn't be buying that OpenAI IPO if it launches this year with my worst enemy's money. To be honest, I think that'll be overhyped, and I think the other models are just going to be better. And you can sort of tell that by the fact that Microsoft's commitment to it overall was, if they get to AGI, which is like the next level of AI, that basically that OpenAI takes back all the shares, and for Microsoft to give that away means that they don't believe it's ever a chance of happening, to be brutally honest. So I always thought that was pretty odd. So that's obviously Microsoft being down about 5. This memory chip part of the market just keeps going as well. I mean, there's shortages of RAM, there's shortages of memory and storage. That story sort of just continues to unfold. United Health made a little bit of a bounce back. Newmont just keeps powering, new record highs for Newmont. Tesla as well was mild, in terms of earnings results, was probably mildly disappointing. But anyone who's holding Tesla anymore, to be honest, they don't care about past earnings. They care about what's happening with Optimus and fully self-driving this year. And they were obviously pretty happy with it because Tesla was up about 4% almost immediately, despite, I think, just meeting expectations, which is like the Australian equivalent of, missing badly almost. And obviously we had Fed Chair deliver no rate cut overnight, basically saying that, I mean, those really strong GDP numbers warrant, caution on inflation moving forward. There were two dissenters, no surprises who they were. They were, they're Trump's mates. I think it was Waller and the bloke that Trump actually installed there. They only wanted a 25. They didn't usually. There's the bloke that Trump put in there usually goes for 50 every time just to be a pain in the butt. But even the non-voting members were all against a rate cut, essentially. Inflation being the grave concern there, and 4.4% GDP. I don't think any central bank in the world has cut rates. Certainly in the Western world, has cut rates with the 4.5% GDP. I don't know what. Yeah, Trump's lost his mind asking for rate cuts, but I mean, he's got to deal with a big debt problem. So but the press conference, they were still all talking about easing. So obviously that's what's driving precious metals. US dollar was a bit stronger, and then it wasn't. I think that everyone was kind of impressed that the Trump Powell spat didn't extend from recent where unprecedented steps of a Fed chairman having to deliver a statement. So but yeah, ASX largely flat, but I mean the miners are going to go well today. Silver miners launches today in the ETFs. The Nikkei, still strong buy. Apologies, the Hang Seng. This is the Hang Seng here. It's starting to get some strong sell signals in the daily. China A50 is 3 strong buys there. Still strong buys across the US, but I mean largely flat. I've got to say. We've got Apple tomorrow. In terms of earnings, and I guess we'll see what happens there. But let's precious metals is still where it's at. I mean, look, I've got to say, gold is probably the most impressive performer overnight, up 4.5%. I mean, that's a big move for gold. It's kind of been dwarfed by silver in recent times, but that's a bust to new highs of 5,300, may even be 5,400, depending on. Copper made some ground, platinum made some ground back, crude up 1%. There's not much to. I think uranium up 6%, so we'll probably see some. The Aussie uranium stocks continue to recover. Boss Energy yesterday giving a better than expected quarterly. So shout out to those long-suffering holders of Boss Energy, and the long-suffering uranium sector holders in Australia, which have been pinned down by shorts. You'll be happy to know that those shorts are now probably just getting absolutely crucified, and those things are being unwound. Couldn't happen to a bunch of nicer people, to be honest. So yeah, we would expect. I think so the likes of Paladin is probably getting a little bit toppy. I think the gold miners and things as well. You might see some overextension today. Aussie Tech again looking pretty cheap, in my opinion, but probably no rush at the moment. If you're going to be in there, probably be dollar cost averaging. Caterpillar will be interesting tomorrow. FOMC meetings out of the way. PPI tomorrow night in the States. Nothing really out tonight. Government will likely shut down in the US by Saturday. Apple earnings tonight. And that's pretty much largely it. We obviously had a really high CPI number here in Australia yesterday that took the absolute wind out of the sails of the growth stocks. I think that rate differential now is more than priced in. We've got Aussie tech lagging US tech by nearly 40% since September. It just keeps getting worse. I mean, look, a percent or so in rates is not a justification for that sort of divergence. And most of the big Aussie tech with those fantastic moats are all doing massive operations in the US anyway. So it benefits their business. So, I think that that's probably a decent opportunity here at the moment. And as I said, healthcare we've been looking at, but it just seems to be just so out of favour, healthcare at the moment. Probably just a little bit, that's probably the falling knife you don't want to catch. So yeah, and I'll give you some more detailed updates about these earnings tomorrow and some of the flow charts. Apple won't be of a hell of a lot of interest, to be honest. It'll just be about how many iPhones they sell, so I'll skip over that. But look, yeah, we'll have a great day. And if the US edition of the call is on today, myself and Mark Morland on there. So tune into ausbiz.com.au at midday, and we're going to go through some global stocks. And I assume we'll be covering, at a guess, probably Microsoft as the stock of the day. So yeah, if you want to tune in there today, midday Sydney time. Have a great day, everyone, and we will speak again tomorrow.